So before we get into this really insightful video, there's something that we must address very quickly and announce. We've got our new 5-day challenge, another one. We did one in November. It was so successful, so we're doing another one now, obviously to start Q2. April the 27th, we're doing our 5-day challenge. All the links are below. Go and check it out. Don't miss out. The seats do go quite quickly. So again, go and check that link out below. The 5-day challenge where you're with me for an hour each day, Monday, Tuesday, Wednesday, Thursday, Friday. And by the end of that week, you will know exactly how I trade, the strategy that I use, the mindset, the consistency code, all the things that you need to obviously move forward. So had to get that out of the way very early in this video because some of you might switch off just before you see or hear that announcement. So go use the link ASAP, get involved in the 5-day challenge. So today, I want to speak about why traders just keep blowing up time and time again. And last week for me and in the community was an eye-opener, a big eye-opener. And I know people go through the same cycles time and time again. I, for one, do myself. We go through cycles. But last week was one of those ones where I think a lot of people were kind of losing their focus at times and trying to force the issue and blown some accounts. So I thought, why not make a video on that? Because this is going to be very valuable for everyone in our community. Big shout out to everyone in the community. Absolutely love you all. And those of you that are new who consistently keep blowing accounts, again, this is going to be really insightful for you. So we've all been there. You've all passed combines. You've all know your great setup. You've all got an edge. Most of you that I work with and most of you that watch this video, you've got some sort of edge. You know the structure, you know the beginner-friendly market structure. You have great weeks, great months, and you have really good weeks and really good months. And then you've sat there watching your funded accounts go from either green all the way down to red, and then they're gone, or your brand new XFAs, really good green into red, or like you say, you're trying to pass your evals. And that can happen in a single afternoon. And that happened to a few people in the community last week, but someone in particular that did surprise me. And I was like, wow, this can happen to anyone, all right? And it can happen in an afternoon, and it can be outside of variables and things like that. I've done many videos on those types of things, but today I want to speak about why this actually happens. Now, the first things first is it's not the strategy, because the strategy works, all right? It worked for you along the way. It's worked for weeks. It's worked for months. And the variable is always you. And we know that now by watching these videos. You already know that you are the variable. You are the problem. So, of course, you have to be the solution. But there is actually something on a deeper level that's actually happening. And it's like a predictable sequence, all right? And I've seen it 100 times with myself, with people that I've worked with. And once you kind of see it, it's very hard to unsee this kind of predictable sequence, your behavioral patterns. And you're going to behave in different ways at different times of the months along the way. That's normal. You're going to have good weeks, good days, bad days. You're going to do things that you shouldn't do. You're going to realign. And that's humanity. That is human. You are fine. I say this all the time because I think too many people put pressure on themselves to be this perfect human. And I think we should give ourselves leeway that that's not going to happen. And we are supposed to deal with and embrace emotions. And that's where then it comes into, and it's kind of like a paradox that we are in, right? And this is where we then have this contradiction within ourselves. And I speak about identity and things like that. But what it is in this video is we have technical competence. Okay, this is what you have. And then we also have emotional incompetence, all right, which you also have. And both of those live within you. Both of those are happening at the same time. Technical competence and emotional incompetence. They're both within you each and every day as you're going through your life. And that's why we always say, wow, life is really confusing. And I don't think we'll ever suss it out. It's really confusing. And then when you add trading into this mix and trying to navigate trading, no wonder sometimes it's like, wow, this is crazy. This is crazy, all right? And that's why we need to simplify that. Now, you can be a great analysis, all right? And also a terrible trader. You can be a good trader, but also then have terrible analysis. There's no right or wrong with that as long as you're getting the results. Now, most content that you see across the board is always going to talk about analysis. You hear me speak about all the time. I don't just want to throw some charts and replay mode and hindsight trading and all that stuff. I find it boring, tedious, and it's across the board. It's everybody does that type of content. That's not what's going to help you. This is what's going to help you. And that's why nobody really talks about these things. One, because I don't think they have enough knowledge on that. And two, it's because they're chasing clicks or views. And you know that we are not doing that. We're trying to give you as much value and insight in here so you can get the best out of that. Now, what's happening here is we have a psychological ceiling. And we've talked about the oscillation cycle before, okay? I've got some content that I'm putting in the course in the background, in the mini program. And if you already worked with me or you're already a mentor, look out for those added modules in the future. But we have this psychological ceiling, right? And it's an invisible barrier. It's invisible. And the strategy can't break it. More time on the screen is not going to break it. More books is not really going to break it. More courses, more different platforms, different prop firms. It's not going to break this psychological ceiling, right? And you keep hitting that ceiling. And that ceiling is, in trading, a monetary number, which tends to be the problem. How many of you have got to like 52,800 on the funded account and then blowing it at the last minute? Or you can't seem to break 52,500 when you need 53,000. Time and time again. So in the community put an unbelievable message last week, and they kept getting to 52,100, 52,000, and they just couldn't break. And it took them nearly a year to get rid of this psychological ceiling that they had within their trading. So what's your ceiling? What account balance do you get to, and then it just goes sideways? You just can't seem to break that ceiling. Have a little think, maybe write it on a piece of paper or even put it in the comments below. Like, what's your ceiling when it comes to try and getting funded or trying to get a payout on your XFAs or your cash accounts, whichever prop firm, or even your personal account? What's that psychological number that makes you feel a little bit uncomfortable and things go sideways? Now, that is fear that is kicking in at that time, but that's for another video. Now, for some people, it may be 2K in profit. Some it may be 10K in profit. The number doesn't really matter. It's the ceiling that matters, all right? It's not the number, it's a ceiling. And that's a psychological problem. It's not a strategic, it's a psychological problem. So just let that think in, write that number down, or put it in the comments below. I'm really, really interested. Now, to solve this, or to be aware of this, to dig a little bit deeper, we have like a 3-stage sequence, all right? So this is kind of the core part of this video. So I really, really want you to take note of this, right? Now, stage 1 is the trigger event, right? The trigger, all right? And the trigger on this example is going to be the loss that you should not have happened. They are the hardest things to overcome and be self-aware, all right? The loss that you had that it should not have happened, all right? Now, you may have a perfect, valid setup, right? And you get stopped out. That's bad luck, all right? Objectively, that is just a loss. That's part of the game. Objectively, that's how you need to look at it. This is the trigger. You need to look at it as that's just a loss. I did my setup. It was a valid setup. I got stopped out. That's it. I move on, right? The market's just not moving in your direction at that time. Now, you as the trader, this isn't an experience as randomness. You don't see it as randomness, right? You see this as, if you're struggling, as this was done to me. So you're now taking this personally. Because if you think about it, trading is random. Trading is probability. But you to yourself now think that the market's done you over. You think now it's stabbed you in the back, as they say, right? So your experience is now as the market's done something wrong to me, all right? Or I've done something wrong in the process. Rather than just accepting the set that it was a valid entry and the loss was a loss, you're now looking and blaming yourself, you're blaming the market, all right? Now, the loss isn't the problem. It's the meaning that you've gave the loss that is the problem. It's what now you're telling yourself around that loss. That's the problem. That's a psychological issue that you have to go down and understand. And that's how trading comes. Now that's stage one, all right? So recognize yourself of how do you see losses in the market? If you're looking at losses as the market's done me over or I did something wrong, you're probably going about it the wrong way if it's a valid setup, because you're now giving that loss a meaning when there's no meaning. It's just a loss. All right. Now, that then leads into the second stage of this sequence. And the second stage of this sequence is the identity response. And I've done many videos on that about identity, etc. Now, what this is something fires inside of your identity. It's not a trading instinct. It's not a trading problem at that time. It's an ego problem. So when our identity gets involved, we have this ego problem. And you know what? People used to bash ego quite a lot. And I was portrayed as having a huge ego, and I did. But it was really, really bashed and bashed and bashed. And I started to believe that egos were really, really bad. Now, ego can be the enemy if it's not managed right. But also, I think you do need a little bit of ego in trading because you're contrarian, you're different. You have belief that you want to be different from the norm. You want to break the golden handcuffs. So you need that little bit of ego of, I am skilled, I am good, I am great at what I do, I feel special, without being too egotistical and have a humble side to that. So have an ego, but try to be aware of that ego, all right? And try to not let that ego overtake bad decisions and put you in trouble. So I digress. This is an ego problem, and there's two versions. There's two versions. So you have to pick the one that you recognize within yourself when it comes to your ego. So it's either I'm better than this, so I need to improve it immediately. So you're dealing with that, all right? I need to fix this, all right? But need to win money back is the wrong way to go about that. So you can't fix this by saying, I need to make my money back, all right? You can say, I need to be better at this, so I need to improve on what I've just experienced immediately, but not, I need to fix this, because this is the market. You don't have the power. Your ego does not have the power to fix a loss if it's the right setup, all right? So that is something that, have a word with yourself. How do you approach that? That's stage two. But either way, remember, you're no longer trading the market when this happens. You're trading your feelings and your emotions and your identity and your ego. That's what's happening at this moment. This is stage two. So give your own version a few moments. Again, take the time. You can pause this video. You can do whatever you want, all right? But write down how you feel. What's your identity around when you lose that trade? What do you put onto that? Do you get a little bit anxious? Is your chest a little bit tight? How are you feeling? What's the next stage? What are you thinking at that time? Very, very important that you take that. That then leads me into stage three of this three-stage sequence, which is the cascade, all right? Now, the cascade begins and it looks very, very different for everyone. Of course that it does, all right? Revenge trading, same direction, bigger size, more contracts. I want to get it back. I flip and I flop my buyers. I size up. I want to make it back faster. You know, I ignore my plan. We've always done this. We've all done this. We've all done this, and we all will still continue to do this at times in our trading. And anybody who says that it doesn't, they're lying. Doesn't matter how much they make, what they say, they are lying because they are human. They are human. And this is how we work as humans, all right? Obviously, we hold it longer past our stops. We go on tilt. We say, oh, Hail Mary trades, a big FU moment to the market. And sometimes it goes right, but the majority of the time it goes wrong for you. Okay? Oh, it will come back. If you just leave it open for another $1,000 loss or $2,000 loss, eventually it's going to come round. All right? No. That is the cascade. That is the beginning of trouble. All right? And if you're not aware of that, it's going to be very, very different for you to get back and pull yourself back to where you need to get to. So we have all these different behaviors. We all behave in a different way, but it's the same root problem. It's the same root problem. Now, again, this is not a trading problem. This is not a trading decision, what's happening at stage three. What is it? It's a trauma response. How do we respond when we are in a environment or a situation where there is trauma? That's a trauma response. That's what we're doing now. This is how we quickly think we can just palm it off and deal with it along the way. Now, these are deep videos because I work with traders who are at the next level, moving to get to that level. And if you need any help with those types of things, then again, and you can't break through, there's a work with me link. Go and click the link, book a call with me, see if it's a good fit, friendly, no sales talk. I don't have a team and things like that. If you want to work with me, fine, no problem whatsoever. And obviously be part of our really, really so fulfilling community. All right. Now, this trauma response is and I go a little bit deeper here, but you got the prefrontal cortex, as you know, all right? That's now offline. And obviously the emotional part of the brain is running the account. You can't afford the emotional part of the brain to run this trading business, this trading career. You must be very, very aware and make sure that the prefrontal is dealing with your trading, whether it's 2 hours a day or whether it's 3 hours a day, all right? Okay, you can't allow that to obviously happen. Now, I want to just talk about I just want to talk about one individual last week. I won't name names, and he has had discipline for a very, very long time, and he was around about 5,200 in profit on a funded account and in the community, and he was supposed to take a payout, and he didn't. But to get to that 5,200, it was legitimate. It was good risk management. He earned that along the way. It wasn't a fluke. Risk was a little bit high, but it was consistent size and consistent profits. Now, the good thing here was he had a routine in what he was actually doing. He knew when he was looking to take the trades. He had a picture in his mind of obviously the discipline. He'd been doing the same thing. And there's someone else in the community who is doing the same thing. And many people do that. They have this vision, they're consistent. And normal morning, normal setup, took the trade, was due to take a payout, and took a small loss. Now that happens, okay? That's exactly what happens in that situation. But what he did after that was where the problem came in, the exact emotional trading, all right? So number one, stage one, fires, he had the trigger of a loss. That was fine, no problem. But the problem came in the afternoon. Well, I wouldn't say afternoon, but the next stage of his trading, later on that day, he took a trade, was, I need to fix this. And that was the beginning of the problem. Because he should have taken a payout, but he lost this one trade in the morning and still had around about $5,000. But I needed to fix this. And then went with size, and long story short, revenge kicked in, Cascade came in, bigger size, and lost the $5,000 by the end of the day. And that took a couple of months to build up this account. And by having the 3 stages, it completely ruined him at the end. Now, of course, we all know in hindsight, you can walk away, you can do all these sorts of things, but he wasn't trading anymore, was he? He was trading his emotional side and going to war with the market. Like the market owed him something. And that's not going to be the case. And at the end of the day, the whole 5,200, and it took him about 2 weeks to recover from this traumatic experience in the market. All right. And I spoke to him that evening or the next morning, and he was down in the dumps. He was down in the dumps. And it's happened this week to someone else that I'm very close with in the community as well. And it happened to her as well. And a good few days to take to realize of the mistakes that we've made. And that's an identity problem at times, which is fine, but we must be aware of that, okay? We must be very, very aware of that. So we need to flip the whole frame, friends. We need to flip the whole frames. And this is a little bit counterintuitive, but this is what we need to do, right? Everything you've been told is backwards when it comes to trading. I don't care what anyone says, right? I spent years trying to figure this out. Everything that you've been told is backwards in trading. You know, stay confident in your trades. It can be an emotional failure. Hold your conviction. It can be an identity response dressed up as obviously discipline. Don't let the market shake you out. All these things. That's just other areas in costumes. All right. Confidence isn't always confidence. And I know you think, what the hell, what are you on about? Sometimes it's ego in disguise. And that's a big thing to take away from this video. Confidence isn't always confidence. It's your ego in disguise, all right? Very, very important. And the most disciplined thing in stage 2 that I spoke about is you need to close the platform and need to walk away, full stop, no more trading, all right? That's how you get back on track. before the whole damage is already done. Now, we find it hard to stop ourselves from that damage. That's what we find it very, very hard to do. But if you can walk away and get a clean slate and let that obviously sink in, you'll come back. Now, the real skill is not having fewer losses. The real skill is not I never lose, all right? The real skill is losing correctly. That's the real skill. Best loser wins. The real skill is taking the stop without inventing or making up some story that you're going to get attached to and you have to try and fix it. The real skill is allowing the loss to just be natural, all right? And not a prediction or not a verdict. And then recognizing these stages before that you go crazily and just unravel. That's the real skill, all right? So traders that trade less, traders that have less size, traders that are not monetary attached, eventually they're the ones that are going to go on to be full-time traders, all right? And they're going to be really, really good at this. So try and figure out where you are at this moment in time, all right? So it's very, very simple. Go through the 3 stages, all right? Tell me directly in the comments below exactly what your problem is, okay? And if you need any help, you know exactly where I am.